So the objectives for Module 9 is to learn about various non-financial reporting frameworks such as Accountability 1000, Global Reporting Initiative, and Integrated Reporting. So it's important to understand monitoring and measuring performance with respect to the 7 cooperative principles, and to identify current level reporting on these principles. So financial statements really tell only part of the story of a cooperative's performance, and this is true for both co-ops and non-co-ops. There's certainly increasing stakeholder demand for wider information regarding the impact of an organization, and it's important to supplement financial statements with reliable non-financial performance reporting. The non-financial information often reflects performance relative to the organization's strategic plan. So here are 3 of the frameworks that are widely used by non-co-op businesses, but have also been used by some larger co-ops and credit unions. Keep in mind, none of these were specifically developed for co-ops. They were really developed for investor-owned businesses. But that's not to say they can't be used by co-ops, because they can, and some are doing that. So Accountability 1000, Global Reporting, and International Integrated Reporting. In fact, there's about 80 different types of reporting frameworks. So these are just 3 of the most widely used ones. So while these frameworks are really good, they don't necessarily provide a lot of help in fully telling the cooperative story in terms of the specific contributions as a co-op. So all the stakeholders, whether they be producers, consumers, employees, beneficiaries, management, members, shareholders of a cooperative, they all need to know more about the impact that the organization is having with those with whom they're interacting. So impact and reporting has become a bit of a catchphrase in the past decade, as more and more organizations of all types tend to better understand their impact, including financial and much more. And there's an article about this by Dr. Fiona Dogood, and that's in this folder. So the 7 principles are very important. They are a way to measure the co-op's performance against the 7 principles. This is a way to differentiate from an investor-owned business and to demonstrate the cooperative difference. While there is comprehension of the difference between co-ops and investor-owned companies, many people have difficulty in describing it. But the principles can be used and are being used increasingly as a framework for determining the cooperative bottom line and for measuring the promises of cooperatives against their performance. It's really essential to operationalize the principles in order to fully understand the impact of cooperatives. So the Module 9 discussion board says this module has presented several frameworks. While developed for investor-owned businesses, can also be used by cooperatives for non-financial performance reporting. So select a framework that you believe would be most beneficial in demonstrating how cooperatives' non-financial performance differs from comparable investor-owned businesses. In responding to this question, consider the framework, which framework would be helpful in measuring the 7 principles. Describe the advantages and disadvantages of your selected framework. So just note here that lecture notes provide just a brief overview of each framework, so you might need to visit their websites to appropriately respond to this question. And that concludes Module 9.